Sham, are we live?
We are live. Start.
Okay, thank you. So, hi everyone, good afternoon, and hope all of you are doing well. So, I'm Sonali Palande, Derivative Product Strategist at HDFC Securities, and I'm delighted to welcome you all to today's exclusive webinar on F&O Roadmap to Budget 2025. So, this is going to be a special live market webinar which we have planned especially for the budget actionables that you can take a day prior. So with the union budget just a day away, markets are gearing up for potential volatility. As traders and investors, it's crucial to be prepared, correct? Not just to navigate the uncertainty, but spot opportunities that arise from it, right? So that's exactly what we are here for. So in this session, we are going to cover how is the market shaping up ahead of the budget. That's one thing. Then key setup to traders to capitalize on the volatility. And thirdly, the investors, how they can safeguard their portfolios. So these are the three main talking points for us today, which we are going to cover. So to guide us all through this, we have two of our esteemed experts with us from our prime research team, Mr. Nandish Shah and Mr. Ajith Nayak. Welcome both of you. So their insights will help you better understand market movements and make better investment and trading decisions for this budget and even after the budget as well. So let me tell you that this is a live session and all of you can drop your queries into the chat box, and at the end of the session we will also take the Q&A so that your live queries about the budget and the market expectation can be solved. Right. So without any further delay, now let me ask Nandish that, the most important question about the budget. What are the expectations for the market from this budget, which is going to be live tomorrow?
Yeah, good afternoon, Sonali. Good afternoon, everyone. Thank you for joining. So is my screen visible?
Yes.
Yeah, so let me start. So yes, so basically we prepared this report 2 days back. And what are the key expectations from the budget? So let me give you some brief about the budget. Tomorrow, Finance Minister is expected to give her budget speech in Parliament at 11 a.m. Our markets, both the BSE and NSE, will remain open despite it being a Saturday due to the union budget. This budget marks the Finance Minister Nirmala Sitharaman's 8th budget and her second full budget in Modi 3.0. So the budget session will unfold in two phases, with the first session starting today. It already started to February 30th, 2025, followed by the second phase from March 10th to April 4th. In this budget, the industry is expecting a significant announcement ranging from change in the income tax slabs, GST rationalization, industry-specific policies, and more. All these are aimed at reviving the economy, job market, and the boosting consumer sentiment. For capital market, the upcoming budget holds significance. If there is any tinkering with the tax rate with respect to short security transaction tax, long-term capital gain tax, or short-term capital gain tax. However, as the government has made changes to capital gain tax last year only, we are not expecting any change this time. And if at all, if any changes are to be made in this long-term or capital gain tax, it would be only minor adjustment this time rather than major shifts. So that's our broad expectation. No major change in the capital gain tax and changes in income tax slab, GST rationalization, and many policies related to industries, which will help to revive the economy and boosting consumer sentiment. So these are the broader expectation from the budget from our side, Sonali.
Yeah, thank you so much, Nandish, for giving us the overview about what are the basic expectations and what market is going to, get from the budget tomorrow. So, because this is a very important event and every year it happens by default. So, Ajit, I would like to ask you what has been a previous few years of trend in Nifty during the budget period? What has been the trend?
Yeah, thank you, Sonali, and good afternoon, everyone. Is my screen visible? I'm sharing one screen. Is it visible?
Not yet. Yeah, it's visible now.
Yeah. So yes. So if you look at the data, so we present the price movement of Nifty before and after 10 trading sessions from the time of budget. So it's a very important data. So if you look at past 10 years data, so Nifty index typically experience volatility during the budget period with a pre-budget cautious approach and more directional after the post-budget movement. So, for example, if we look at 2021, we saw that there was a 6% correction pre-budget and a 7% rally after the budget. And similarly, in 2016 and 2023, saw positive post-budget reaction, whereas 24 and 2022 here, we saw a negative post-budget reaction. So I feel it largely depends on the policy announcement at that time. So whatever the policy governments comes up with, so that kind of implication we will have. So there is no kind of a serious pattern which we can observe. It depends largely upon the policy. Over to you, Sonal.
Okay, all right. So here we can understand that even if we look at the trend, it is totally based upon what we are going to get tomorrow. So it's hard to get a clue from the past as of now. So Nandish ji, I would like to ask you that just a day before, how is market set up or how is Nifty set up from the derivatives perspective, and what are the important levels in Nifty as of now?
Yes, Sonali, so there are many important data to talk about. As January series rolled finished yesterday and we have moved to a February series. So let me share some important data. First of all, during the January series, Nifty continued its outward journey, and in this series, Nifty fell by 2.11%. So this was the fourth consecutive series fall for the Nifty. If I were to see the historical data, there are only 4 instances in the derivative history. So since 2000, from where derivative has started, there are only 4 instances where Nifty has seen 4 consecutive series fall, and that's what happened this time. But now let's see the history. Nifty has never fallen for 5 series on the trot, never. So since 2000, Nifty has never fallen for the 5 series on the trot, and therefore history suggests there are higher possibility of strong pullback rally in the February series. That's what the history suggesting, as we have never seen 5 consecutive series fall till date since 2000. Apart from the second data I want to say is the FI's long to short ratio. FI's long to short ratio in the index future at the beginning of the February series stood at 0.13. 0.13 as against 0.23 last series. So, and this is the lowest long to short ratio since 6th October 2023. So almost more than 15 months, we have seen this lowest long to short ratio. In other words, we can say that out of their total positions, FI's total position in the index future, 89% is on the short side, while 11% are on the long side. So we can say that FIs are aggressively short at the beginning of the February series. Now let us see it with the history. So there are 4 instances here after Corona pandemic. So after March 2020, where FI's long to short ratio at the beginning of the series stood at or below 0.15. So what are the 4 instances? First is 30th May 2024, 2 months back, 26th October 2023, 29th March 2023, and 29th September 2022. All these were the beginning of the series. All these were the months where we started with the long to short ratio below 0.15. Now let's see how the Nifty behaved in the subsequent month. So here I have made a table. In 30th May 2024, we started the series with long to short ratio of 0.15. And the next series, that is June 2024 series, ended with the 9% gain. 26th October 2023. At the beginning of the series, long to short ratio of FIs was 0.12, and in the next series, that is November, Nifty moved up by 7%. In March 23, it was 0.1, and the Nifty moved up by 7.74 in the April series. And in September 22, it was 0.15, and Nifty moved up by 5.5 in the October series. So in all the 4 series, Nifty gained significantly and with the average rise of 7%. So history suggests that both this data, one is the four series consecutive fall and FI's long to short ratio. Both these data suggest that markets are likely to rebound in the February series. That's what the history suggests. Yes, what comes out in the budget is very important because that would determine the trend. But as of now, from the data, it suggests that we are likely to edit higher. Apart from this, now let us come to the option side. In put option, we have seen significant put writing at 23,000 levels, both for the 6th February series and also for the February end series. So this level of 22,800 to 23,000 is likely to take as a very strong support because that's where we have seen most of the put writing. So this level is likely to take as a strong support. On the higher side, this 24,000 level is likely to take as a strong resistance, which consists of highest opportunities in calls. So coming to the levels, broadly, we think that unless Nifty closes below 22,800, we should be positive. On the higher side, once we manage to close about 20,500, we should move higher to 24,000 levels. That's what the data is suggesting as of now. One more data I want to share is the FIs. One more share I want to share is the Nifty future open interest at the beginning of the February series. We are beginning the February series with Nifty future open interest of 1.82 crore shares. This OI is highest since June 2019. So this suggests that depending on the budgetary announcements, market may be very volatile because open interest is high and many people are holding their positions and there will be a short covering or long unwinding post budget. So we are expecting a highly volatile time going ahead, but our view remains positive considering the past data and our historical evidences. That is all I want to share, Sonali, for the market view.
Yeah, thank you, Nandish. So, as you mentioned, you have given us the levels, you have given us the background of the data, and you also mentioned that it is going to be very volatile. So, it sounds very exciting to all the traders, to me, and of course to the investors as well as very cautious. So, now because we have seen the other side of the data, I would like to ask Ajit, do you see any such clues in the FIS numbers as of now? What you see, what institutions are doing as of now into the market? What they are expecting.
Uh, yes, so I'll show that with the help of a chart. One second. So that is a very, can you just see my chart I have shared?
Yes.
Yes. So you see, so we have come up with a very interesting observation. So if you look at 2015, FIS were deeply short. So the chart, this is a Nifty chart, and here is FIS long percentage, and this is clients futures long percentage. So here, if you look at in 2015, FIS were hugely long, and after that we saw a good amount of correction. And here at in 2022, when market corrected, FIS, you see, FIS long percentage was below 17. So they were hugely short here. And after that, market rallied like anything. And currently, at current, we can see that at current scenario, a similar situation is occurring. The FIS long percentage is just 11. So the amount of short they have built in the system is very huge. And at the same time, client long position is 72.15. So here, if you look at the market from a demand supply point of view, FI needs to now cover their short position, and clients are the one who will just fulfill their short covering demand. So at any given point of time, the number, if from 11.11, if it crosses to 17, so I think there would be a good amount of rally in the market. And also, a market is very well placed at the daily demand zone of 22,800, from where we saw that market began to rally. So there are, as Nandish mentioned, the open interest data, like from 4 consecutive series, we are seeing short buildup in the system. So corroborating all these view, I think we are in a short-term kind of a low. We have made a short-term kind of a low. If we do not breach that 22,500 mark on a closing basis, there is high probability that market could cover their shorts, FIs could cover their shorts, and we can witness a rally in the market very soon. And that trigger can come from tomorrow's budget session. A small positive indication could lead to a greatest amounts of liquidity in the market, and can hence we can see a good amount of rally in the market. So we are little bit of positive looking at the date from a data perspective. Yes, Sonali, over to you.
Yeah, so that was very insightful and seemed like a insider's information like from the FIs. So it was like a very detailed number and analysis from you, Ajit. Thank you. So now, Ajit, again to you. Because now we have seen the background and everything. Now the most important question to you from our traders audience: how do we encash all of this setup of the budget and tomorrow's outcome, whatever it can be, but then how do we encash, how do we be prepared, what are the strategies that traders can encash upon, what should be their plan?
Yes, Sonali, this is a very important question. I hope everyone here in the budget is now looking for that question. So there are two perspectives we have come up with. One for the investor that I'll be explaining, and one from a trader's point of view that Nandish will take over. So let us first understand for the normal investor what they can do for this budget. So given the significance of the upcoming budget and the potential impact on the market, it is crucial for investor to have a well defined risk management strategy. We know that. So let me break down into this top three key points. We need to understand from the market context. Okay. So the market have seen a strong rally of over 200% from the March 2020 lows and 50% higher from the June 2022 levels. Despite a correct 12% correction, the markets is still elevated, is at elevated level. And due to the vulnerability of this volatility, so it is very important for us, for the investors to hedge their portfolio. So how they can hedge? So one of the most prudent ways to protect the a portfolio from the downside risk is by using Nifty put option, a naked put option as a hedge strategy. So we need to first understand the quantum of the size of the portfolio. So what we have recommended a strategy is to buy Nifty 23,000 put at 240 level. We have recommended this 2 days ago. So this is the price of Wednesday. So given that each contract lot size has a 75 number of share, the contract value stand at 17.25 lakh per contract. For 1 crore of portfolio, a hedge would require 6 lots. And the cost and the benefit of hedging is the 1 crore portfolio of 1.08 lakh, which is around 1.08% of the portfolio value at Nifty 23,000. The small cost will act as an insurance, ensuring that if market declines due to the negative impact of the budget, the downside is we are sharply protecting the downside risk by taking 23,000 put option. So what I want to conclude is for investor with a large cap portfolio in sync with the beta, we know that the large cap portfolio beta is 1. That is why we are recommending 23,000 strike price. So if any negative event comes or any negative things come from the budget, the downside will be protected, and it is a very simple and a cost effective and widely used method to protect the portfolio. So, what is the takeaway is in the times of volatility, protection is better than panic. So, a well-managed hedge will help investors to stay invested with confidence. So, the trading perspective, from a trading perspective, how our traders can take a position, Nandish will take. Over to you, Sonali.
Yeah, Nandish, for the traders, I would like to ask, what is the
Yes,
strategy?
yes. My screen is visible, right?
Yeah, visible.
So for traders, we issued this report 2 days back. So basically, we have considered the price of Wednesday closing. We issued yesterday morning. So for traders, we have issued a long butterfly with calls. The name of the strategy is long butterfly with calls. This strategy mainly issued looking to capitalize on market volatility on the back of budget announcement. So let me show you what are the rationale we have considered. The first, as I discussed earlier, we have witnessed aggressive put tightening at 20,000 levels, suggesting strong support around that levels. FI said we have already discussed. FI's long to short ratio is at oversold level, and we might see a short covering by from their side in the days to come. That's what our view is. Apart from that, current option IVs, when we made a report 2 days back, the IVs were 23%, which was higher than 5-year average of 21%. And our report, let me show you. We have studied the IVs data of last more than 10 years, and it shows that once the budget comes out, IV falls sharply. So here in case of Nifty, the average fall in IVs on the day of budget is 2.32%. So we believe that this time it won't be different. So once the IV comes down, it would help this strategy long butterfly. So this is also one of the reasons why we are giving long butterfly strategy. And broadly, considering the call lighting at 24,000 levels, we think that Nifty is likely to remain in the range between 20,000 to 24,000 level. And this is the reason why we have issued this strategy. It's a long butterfly spread with calls is a 3 leg strategy that is created by buying one call at lower strike price, selling 2 calls with higher strike price, and buying 1 call with even higher strike price. So here, what is our outlook? Our outlook is moderately bullish. We think that Nifty is headed higher. Maybe 20,500 is the level around which Nifty may find resistance. So we are advising client buy one lot at 23,000, call at 474, sell two lot 20,500, call at 220, and buy one lot 24,000, call at 74. Uh, we have to buy all. We have to enter into all these legs simultaneously. So it's one should buy call, sell call, and again buy call simultaneously. So here in this strategy, maximum profit comes at 29,400, while loss comes to 8,100. Although the levels have changed since last 2 days, Nifty have moved up, but I also checked the level a few minutes back, and more or less risk reward ratio remains same. So if somebody still believes at this point of time also, one can execute this strategy. Yes, maximum profit and maximum loss will change, but the risk reward ratio more or less remain to 1 is to 2.5. So one can execute this strategy as of now also. So we are in this chart we have discussed about this strategy. Rational, what are the rational? I already mentioned. We are expecting Nifty to remain in the range between 23,000 to 24,000 levels, and it allows traders to benefit from a mild bullish bias while limiting downside risk. So these are the rational on the basis of which we are recommending this strategy. In this strategy, upper break-even points come to 283,892, while lower break-even points come to 23108. So broadly, if Nifty remains within the range of 20,100 to 20,900 on the 6th February, this strategy will give you some profit. Yes, highest profit if Nifty closes at 20,500 levels. The approx margin requirement for this strategy comes to 77,000. So that is all I want to share regarding strategy for traders.
Okay, thank you so much, Nandish. So, for the traders, we have this strategy, and for the investors, also, we have shared what should be the actionable to protect your portfolio, which is very much valuable, and it should not be, openly exposed to the risk of the budget. So, both the actionables we have shared. Now, broadly, we have, covered most of the major topics that we wanted to cover in this session. Now, if you have audience any questions which you want to ask to our prime research team, you can put down the questions into the chat box, and we will take the questions one by one, so that your queries will be resolved. So we are awaiting for some of the questions. There is one question. Can you share the PPT to the HDFC Securities account holders to mail ID? Sir, I would like to tell you that PPT will not be shared, but it is just made based on the report that was published. So you can go to our website, and you can access the report anytime, or this will be also shared to you from our team to your mail ID. So you will get the report, sir. There is one more question. I think Ajit, this question is to you. If protective puts are bought, what will be the right time to square off those after the budget?
Ma'am, protective fruits, we have to first consider about the valuation of the total portfolio that we have mentioned. It depends on the beta also. So what is the beta? And then we take a put accordingly, according to the size of the budget. So as soon as the budget even has come out, and after a day, when we know that the trend is going to be upward or downward, we have bought this to protect the downside risk. So as we know that if it goes above the previous day's high or weekly high. So one can just square it off because the trend it will be in a trending zone. We have seen in the past data that a post budget is always trending. So after 2 or 3 days, it doesn't make sense to hold that portfolio because we know we have already discussed that IV will come sharply down. So once the IV comes down, then the value, the premium of the put option will also reduce simultaneously when market goes up. So when there is a positive news in the budget and when market goes up, then I think it is a best time to square it off. Or
Yeah.
and another thing, if they hold till the expiry, we have recommended 6 February expiry. Then also it is not an issue because we are expecting to buy a put as an insurance product protect our downside risk. So that cost we are already borne in the mind, like what will be the total loss if we buy that thing. That is actually not a loss, that is a cost. Every business has a cost. So it will act as a cost to a business, right? So if they don't know when to exit, they can hold and let it expire worthless. If market comes down, they'll benefit. If it goes up, it will expire worthless. Consider it as a more of an insurance product rather than taking benefit out of that product.
Yes, yes, definitely. There is one more question which is connected to this only. So if someone buys the put that you have mentioned and the index moves up, so is there any level specific where we can exit from that put after the budget?
Yes, ma'am. So that is what I have most of the things I have covered in the previous question. If it crosses weekly high, one can take. So it is a trigger. When to exit is a trigger. So if it crosses the weekly high, then it is a trigger. So it will expire by 6th of February, right?
Yeah, okay.
So after the budget, we know that there is a huge volatility going to be in the market. So as it crosses the weekly high, they can just exit, and if they feel that it won't come down. So consider it. My only suggestion is consider it as an insurance project. Don't speculate over it. For that particular trading aspect, we have given one more strategy where they can consider that for the speculation purpose.
Definitely, yes. That's the right answer. That, for traders, we have shared something else, and this is for investors. So investors should look at it from a insurance perspective, that this is going to, safeguard your portfolio. So, there is one more question. I think this is for Nandishi. Is there any important level that you can share for Bank Nifty?
Yeah, so regarding Bank Nifty, there are Bank Nifty also. If I were to talk about short term trend again turned positive because Bank Nifty has crossed its 5 and 11-day EMA, which we consider as an important EMA. So Bank Nifty short term trend turned bullish. Now the important resistance comes to around 50,500 to 51,000 levels, where we have seen call writing. If I were to see the put writing levels, this 48,000 to 48,500 are the important levels where we have seen put writing. So broadly speaking, on the lower side, 48,500 is support, while on the higher side, 50,500 to 51,000 is a resistance level. And Bank Nifty, as it is a sectoral index, it's likely to move violently once the budget announcement comes. So Bank Nifty, you need to find out levels once the news comes. But as of now, it seems that 48,500 is a strong support, while 50,500 to 51,000 is a likely to act as a resistance as of yesterday's. If we were to consider today's data.
Yeah. Thank you so much, Nandishi. There is one more question. This is a bit specific, direct question. But let me know if you can answer. There is a question that is there a possibility that we open at 24,000 on 6th of Feb? It's a pretty much direct question, but then if you can
Yes,
answer.
so in market, it's a saying, never say no. Anything is possible. So yes, that could also be possible. But as of now, considering the market trend before the budget and the significant call writing at 20,500 to 24,000 levels, our view is that that range of 20,500 to 24,000 is a strong resistance area. So if something positive comes in budget, anything could happen. That's why we are giving true strategies considering budget volatility. But our view is that 24,000 level is likely to act as a very, very strong resistance in the days to come.
Okay, thank you so much. There is one more question, and this is a very important question. All the audience should give attention to it. There is a question that can I ask these strategies to HDFC RM to execute these strategies? Will these recommendations available with every HDFC RM? Can you please once again mention to share those strategies? Okay, we will share the strategy once again, but let me tell you that this report and these strategies that we have shared right now is available with all the employees of HDFC Securities, and you can call your RM anytime to execute the strategies if you want that assistance. So do not hesitate, take the assistance of our branch employees, and that will be helpful to you definitely. So Nandish ji, एक बार आप अगर strategy वापस से बता सकते हैं तो that will help.
Yes. So as of in the morning yesterday, we have issued one strategy for trader, one for investor. So I am going to discuss the strategy which we issued for traders. We have issued a long call butterfly strategy. Here our view is that Nifty is likely to remain in the broad range of 20,000 to 24,000 levels. And we are expecting IVs to drop on the budget day, which will be beneficial for this long butterfly strategy. So here we are recommending clients to buy one lot of 23,000 call at 474, simultaneously sell two lot of 20,500 strike at 220, and buy one lot 24,000 call at 74. Yes, levels have changed as we have prepared day before yesterday, but still you can execute this strategy. The levels at which we have given in that strategy, the maximum profit were at 29,400 if Nifty were to close at 20,500 on the 6th February expiry. And maximum loss in the strategy is 8,100. Whatever happens in the budget, whatever news comes from the budget, your maximum loss will be limited to 8,100, which means that there is a strong risk-reward ratio above 3 levels. So basically, strategy is it's a straight leg strategy. Buy 20,000 call, sell 20,500 call 2 lot, and buy 24,000 call 1 lot.
Yeah, thank you so much for letting us know the strategy again, Nandish. There is one more question. It is a general question. Are you providing weekly option selling strategies? Where can I see the strategy?
No, so as of now, we are not giving weekly selling option strategy because normally we give only those strategies where risk is limited. In selling weekly option call, the risk will be unlimited, and those type of strategies as of now we are not providing.
Yeah, but other than just the pure selling, other strategies are provided from our research team, and you can find those strategies in our InvestRight app, HDFC Sky app, and on our web portals as well. So you can definitely explore that. And also there is one more question. How do I get to know my RM? So if you do not know who is your RM, just call the customer service and they will help you out for the same. So this was about the last question. And Nandish ji and Ajit, there is appreciation that thanks HDFC Securities and to both of you that this is very helpful. And I mean, this particular session has helped the clients a lot to navigate the budget session. So I think these are all the queries, and we have more or less covered most of the questions. So thank you so much, Nandish and Ajit, for giving your insightful, expert recommendations and the comments on what to expect from the budget. So this is a thanks to you. So now, as we stand on the brink of the budget announcement, the market is bound to witness heightened volatility, as mentioned by our experts. And the key takeaway from today's session is to be prepared, whether you are a trader looking for opportunities or if you are an investor aiming to protect your portfolio. So whatever it is, we have given you all the insights about what to expect, what to do, and how to be prepared, right? So thank you so much everyone for joining this session, and thank you so much for taking out time during the live market hours. We hope that this has helped you to get a direction how to navigate this volatility and how to take advantage of it. So do explore all our platforms, whatever it is, InvestRight or HDFC Sky. Do explore and let us know your feedback if it was helpful to you, and about the features as well. If you want to let us know, that is also a great way to connect to us. So thank you so much everyone for joining, and do not forget to join our further events based on the budget with the when we come up with the analysis of the budget, which is tomorrow and day after tomorrow. So thank you so much everyone, and have a good trading day. Thank you, Nandish. Thank you, Ajit.
Thank you. Bye.